Thanks, Todd, Anna and John, for being here. Really three of the sharpest minds in the investing universe here. And Todd and I go way back. We used to work together at Colonial First State, and I must say Todd was a pretty handy middle order batsman and for quite a zippy little bowler as well when we used to play our cricket game back at Colonial. Thanks for being here, ladies and gentlemen. And look, why don't I just start off with a pretty broad question for John and Todd. And what do you see the broad themes for the rest of the 2024 and how it may be different to 2023 in the resources space, and particularly probably down the smaller end of town as well? If you could maybe have a chat about that.
Well, I'll start with hopefully it's better than 2023. 2023 wasn't a whole heap of fun, it's fair to say. In terms of where we see the landscape playing out for the balance of 24, look, I think it's actually nice to see over the last couple of months we've seen a bit of a bid come back into the market. And maybe that's, in very simple terms, it's a bit of a reversal of sentiment, which is just, it got so bearish. I don't know that fundamentals have obviously changed dramatically in the last couple of months, but we all know this is a fairly small sector, so it doesn't actually take that much, in terms of dollar flow to actually start get things moving. I think in terms of where that sentiment gets most excited, setting aside the challenges of what's going on in the US towards the end of the year, I think the sentiment towards China actually got way too bearish. And we're starting to see that the perception of China is actually shifting more, I think, towards the reality being that it's not near as bad as keeping it to it. So with regards to obviously in the small end of the market, it's the EV related commodities I think start getting a bit more attraction, and of course Dr. Copper is seeing a bit of a bid now because apparently it all just goes into our way.
And John, what are your thoughts?
Yeah, I think one of the big changes from last year that most people are seeing is the change in sentiment towards inflation, a little bit stickier than people were thinking or hoping it would be, and rate cuts have been pushed out, and that impacts a lot of things from the gold price to sentiment towards junior resources. But certainly agree with Todd that 2023, I had a lot of people say to me it's never been, they've never seen it worse for the junior resources sector. I went to Canada in February, and music to my ears, I had a couple of people say it's never going to come back, like capitulation. And that to me is a good sign of the bottom of the market. So I think we can hopefully see it's bottomed out. It doesn't mean it's going to pick up straight away. But the other thing that I've noticed is that even with copper stockpiles on the Shanghai Futures Exchange, at a 5-year high at the moment, we've seen copper price break out of a mid-term trading range. We've seen zinc up. We've even seen nickel up. I attribute that to, I saw a piece of news out of Bloomberg last week, which said that at least 3 of the big oil trading houses have gone back into trading metals. And that's Gunvor and Vitol and Mercury, I think. And I think there's quite a coincidence between a number of these metals rallying at the same time over the last month or so, and these trading houses going back into trading metals. So I think in the short term that's good. In the long term, fundamentals look excellent for many commodities, but I think it could also mean that there's going to be a bit more volatility in those metal prices.
And do you have a particular commodity or commodities that you particularly got your eye on at the moment that stand out to you?
Look, obviously gold, we've seen it hit all-time highs, not just in nominal terms, but in real terms as well. That's, the mid-tier market cap gold producers in Australia are doing extremely well. I expect they will start to mine lower grade ore, and their margins, might not be as handsome as they might otherwise have been, but still they're going to make a lot of money, and that will eventually start to trickle down into the pre-development companies. I think we have seen, what's pushing the gold price, at least partly. We know the central banks and Chinese central bank have been buying a lot, and regularly. It's just really interesting to me that their holdings in US Treasuries have gone down almost inverse to their holdings in US dollar in gold. But also really interesting to see, it's probably very much at the margins, but the Chinese consumer, their retail buyer, and they're buying gold beans and all sorts of things. That's attributed to a loss of faith in the Chinese real estate market, and you even see young millennials going out and buying gold now, which is sort of quite interesting. So that traditional Asian interest in gold is still very much there. So that's a theme. We like gold both in the short term and the long term.
And Todd, you got any thoughts on any other commodities?
Well, I'd definitely throw the ubiquitous copper into the mix. It did feel like we were swimming into a vacuum last year when we were espousing the upside for copper. With regards to copper, obviously a lot's been made at the current point in time about AI and what it means for power and therefore copper. We actually think that, frankly speaking, we're pretty agnostic about whether AI happens or decarbonisation, really drive. We think it happens, but even if it doesn't, the copper market is so very tight. There's just not the same degree of supply that you would, in a historical sense, expect to come at these sorts of prices. With regards to other commodities, it sort of goes to what I said early on. We do think there is, it had such a route, frankly, for the battery-related commodities, lithium, graphite, etc. We think there'll be you don't want it to do this yo-yo thing, but I think there's a foundation rebuilding beneath some of those commodities.
Well, thanks for that, gentlemen. And look, I'll go over to you, Anna. And you come from obviously a bit different angle to these guys at RCF, and I just wanted to sort of ask you, from your side, what are the key themes for you? What do you see as far as the mining sector regarding technology and innovation? What are the sort of main things you're seeing there?
Yeah, absolutely. Thanks, Mike. And g'day to everybody out there. Nice to see you all. Look, so I start at the very high level, which is obviously mining's becoming more complex, more remote sites and locations for a lot of these deposits, more expensive to mine, and the grades are declining. I mean, we've seen a huge decline, I think 30% decline in grades in copper in Chile over the last 15 years or so. So if you have that as the backdrop and you say, okay, well, how can we do this faster, smarter, more efficiently? Innovation and collaboration is the way that we can do that. And I spent a lot of my time thinking about that and working with some of the largest mining companies around the world and some of the smallest ones. And I guess in terms of other reference points, when all the large miners are setting up their own venture capital funds internally, that they too are trying to solve some of these problems, and that could be BHP, Mitsubishi, you name it. They're all trying to sort of set up these SWAT teams internally. So we are thinking about a lot of the ways in which mining companies can just do stuff better. And that ranges from, machine learning, robotics, sensors and the data that you can harvest and how that provides insights around preventative maintenance or just, reducing footprint. We think about, of course, all the ESG items and sustainability, so sort of mining footprint flowing into water use, energy sources. So it's a really interesting time to sort of be sitting smack bang in the middle of all of that. But we do see that that's the pathway forward to sort of do things more productively. And the byproduct of that often is, that there's been an improvement in sustainability or impact.
Yeah. And do you see sort of any geographic themes in what you're looking at, and any sort of anything coming out of like big US pension funds and what they're looking at and how they're investing?
Yeah, look, so RCF is headquartered out of Denver in Colorado, and we've invested in over 50 countries, over 30 commodities over 25 years. A large part of our LP base are US pensions and foundations, so we speak to them a lot. I'm spending a lot of time with folks in APAC and the big supers here. I wouldn't say it's geographic as much as the macro backdrop is creating some change. So geopolitically, everyone's figuring out how to onshore stuff, what do I do if my supply chains are broken or disintermediated like they were during COVID? And so the pensions are thinking about those thematics as opposed to should I invest in South America or Canada? But there's a couple of other, interesting things that are being pushed by governments around the world, as we can all see in the press. In the 90s, the Canadian pension funds had to have 90% of their capital invested in Canada. That was sort of, they moved away from that. 2005, they could invest anywhere. I think we'll see that go back. And they will be given some sort of loose marks around where they need to be investing and try and bring some of that capital back home. But we're still seeing a lot of interest. I mean, in the press over the weekend, I think CDPQ is investing alongside Aussie Super in renewables. So there is a lot of capital out there that needs to go somewhere, and I think it's much more around the macro themes than it would be, physically where.
And look, this is a bit of a question for you all. I'll open it up to you all. Is how do you see Australia mining winning from the decarbonisation, electrification, critical minerals thematic, and what are our key advantages in Australian mining and in Australia in general?
I think part of the advantage we've got in Australia is that we've got a market which is familiar with resources, firstly. So from a capital markets perspective, there is an avenue for raising capital, albeit it's been obviously challenging in recent times. But in terms of the global scale, we have that. State by state, obviously it does vary with regards to your ability to bring a mine to market. But the reality is that we do have relatively a mining-friendly jurisdiction. With regards to the types of commodities, obviously we do have tremendous mineral wealth, that's no secret. And it's just going to will depend on where you are, though, as to how easy it is to tap into to get that thematic.
Yeah. And Anna, do you have any sort of thoughts on that?
Oh, yeah, I do. So it's obviously a lot of the governments around the world are throwing money at this. I think a couple of stats for you all. So the US has got to invest something like 1.87 trillion in clean energy assets over the next little while. I think globally, the International Energy Association came out. I've got my theme music. It's a different kind of show. No, I'm just. I think we need to spend about $4 trillion, by 2030 to hit our net zero targets for 2050 globally. So the Australian government's come out with Future Made in Australia Act and a bunch of money with the National Reconstruction Fund, the Clean Energy Finance Corp are there as well. And why are they looking to invest back in Australia? I think a couple of reasons. We're proximate. So we're proximate to a really large end market in Asia, in Japan, in China, Indonesia, where a lot of stuff is made. I think we will need to start making stuff ourselves, and we'll also need to do a lot more processing ourselves. And so I think they're the areas in which we think about where to invest, but also how Australia can win. We're an incredibly entrepreneurial country. We don't have the demography or the population that other areas do, and so we just have to do things smarter and a bit more creatively. And so that's, I would encourage everybody to sort of think about that in terms of their businesses on how they can win. But we're sitting on, an incredible advantage, I think, in terms of some of the things I mentioned.
And do you think we'll win out of, the US throwing it, however many trillion it was you quoted around, that some of it will come our way?
Oh, well, there's, and I won't point any fingers, but there's folks, Australian companies that are going and setting up mastheads over in the US to access some of that capital. I genuinely, it's a bit like funds management. You've got to have funds to manage to do well. It is about the quantum of capital out there, but I also think you've got to know what to do with it, and it can get quite crowded. And so, the capital is only one of the things that you need to win, would be my response.
Excellent. And look, back to Todd and John, I think this is a bit of a question that, it's a tricky one. But do either of you have any bit of an out there contrarian thought at the moment that, some of the others, the market may have not have thought of? Is there any sort of things that you might think that's a bit different?
Look, I'm just picking up on Todd's theme about, transition metals, if you like. I think there's a couple that look quite interesting at the moment, just from the signals that we're seeing from industry. Like the market has absolutely abandoned nickel and absolutely abandoned lithium, but the signals in both those metals from industry, like last week we saw Ardea announce a big JV, $100 million JV with a couple of big Asian institutions. And we've on nickel, we've also seen that happen in North America. Really low-grade projects like Canada Nickel. You've seen Asian and Agnico Eagle going into a couple of those really big low-grade nickel projects. So the signal on nickel from the insiders is actually a lot better than the signal from the market. And I think similarly with lithium, like lithium's been smashed, but sort of anecdotally, I'm hearing that at PDAC there was a huge amount of interest from lithium producers in the potential pre-development companies. So there's a couple that we're really looking hard at in terms of opportunistically getting in when straw hats in winter.
And Todd, have you got any other thoughts?
Well, I'd probably throw in the mix fossil fuels. I think it's an area where, well, it's called an energy transition for a reason. It's not an energy switch for starters. But also, I think there's this stark reality that we are going to face in a faster and faster fashion, that actually the money that hasn't been spent over recent years, and going back to Anna's point about the amount of money that needs to be spent on decarbonisation, it's a huge amount of money, but the longer we delay it, the faster we're going to spend it, and the more we have to rely on the old sources of power generation. So, whether it's thermal coal or gas or whatever, it's never going to happen. But the fastest route to the world solving some of its near-term carbon issues is getting Russian gas into China. That's never going to happen. But it's just endemic of the broader thematic that is, we're going to need to continue to deliver an awful lot of gas. We're going to need an awful lot of oil, and I'm here to tell you that demand for those commodities is not going down anytime soon.
That's right. And Anna, any sort of out there ideas from you?
Look, not in the commodity space. We spend a lot of time thinking about the digital mine, smart mines, people, how many people will we need or not need, or will they simply be doing different things? And I guess the one reference point I had last week, I was up in Kalgoorlie, and one of the folks that I work with up there was telling me about what their kids want to do when they grow up. And one of the kids wants to be a diesel mechanic, or thought he did, but he's now decided he's going to go and train in electrics and electrical fitting, because the fleets in 5 or 10 years are going to be completely electrified. So I think ways of working and the types of work that we will think about over the next decade or 2 decades, we should think about, and particularly picking up on some of this transition.
And I've just sort of one wrap-up sort of question for all three of you. Do you have any sort of golden rules that you stand by or must have when you look at an investment?
Could be awkward in this environment. Look, there is no golden rule. If it was that easy, we wouldn't be sitting more. But I think one that's the reality is this is a lot of art and not just science. And you need to back known money makers. People who've made money before. I think that's something that often gets forgotten. It's the people, because the saying goes, you can't turn shit into strawberry jam, but you can't do the opposite.
John, have you got any thoughts on that as well?
Yeah, look, I think a couple of things that we'd like to see in our investment, and we're very much focused on the pre-development side of things. One is, we'd like to see the exploration sizzle and the potential for the mythical 10-bagger. And the other one is, we'd like to see commitment by the management, because like many projects fail, but you've got to have a management that's going to stick with the company and pivot to something that can pull the company back, and give it some value.
And any thoughts on that?
Buy well. I think where you invest is almost more important than where you exit. So we think a lot about that. But equally, what is your downside and plan B, C, D, and E? At the moment, there's a lot of care put into sort of the contingency scenarios if the world were to change tomorrow, which it may, right? And so just having those in your back pocket, and then you're not caught off guard through the investment hole. Yep.
Danica, I don't know, is there any time for questions?
Yeah, any audience questions?
Yeah.
It's been great. Mining jurisdictions, obviously you're all Australian and you love Australia, but outside of that, I mean, you can always refer to Fraser Institute, safe jurisdictions, but you guys personally, where are you seeing the most excitement in terms of where you look for projects globally?
I swore I'd never invest in the stands, but we've just put some money into Kazakhstan. The geology looks incredible. So that's one place that we're going, putting a very small toe in the water.
I think, Robbie, it's constantly changing. There's case in point. I was having a conversation earlier today about Perseus and Jeff Quartermain saying you'd never invest in Tanzania. That was only 12 months ago. So, the reality is that geopolitics does change. But yes, there's variances on theme, and some will always be good, but degrees of, and perhaps the other end of the spectrum as well. But I think the reality is you need to remain nimble because whilst the geology doesn't change, those that are in control of it does, and so so you got to be flexible with that as well.
Oh, look, we're investing in operating businesses. We're a global mandate. I'd say 50% of the businesses we invest in are in Australia today, but the other 50% are global. Silicon Valley, Canada, Europe, but we're largely led by our end customer base. So wherever there are mining companies and or operations is where our portfolio companies will be operating and or selling their products. So we're a bit of a mix, I must admit, across the world. Yeah.
Any more questions from the audience?
Any the steps, yes. Okay.
Tim Monkton. Question for the whole panel. What are your views on uranium?
We've got a uranium fund. In all seriousness, we launched this fund a long time ago, and for a couple of years there, we didn't have too many friends. We were screaming into a vacuum. And even more recently, when we'd started to see a recovery in uranium prices, and we were asked the question, well, what's next? What is the catalyst to get things moving? And I couldn't point to a particular catalyst to get the world excited, to get investors excited about it. They were all on the table. It's just waiting for people to look at them. But I think, in more recent times, it's been the market coming to the realisation that, it's been this whole renewables versus nuclear versus fossil fuels, it's become a Ford versus Holden. We need all those alternatives. And in our view, uranium is just one of those, but it is an incredibly tight market with, massive demand drives. And we've been working our way through a huge stockpile for many years now, obviously since Fukushima, which is now a long time ago. I mean, that's 2011. So we've worked our way through that, and the reality is we now got more nukes under construction than we've had since the 70s. And yet, there's not too much more uranium coming in the ground.
John, you have view on that?
Yeah, look, I think there's a couple of interesting data points that's came out over the last week or so from the two big producers, Kazatomprom and Cameco. Kazatomprom are trying to make a virtue out of not being able to expand their production and saying we're conserving our resources or something like that. So it doesn't look like they're actually able to increase production. And Cameco, I think the numbers are that they've got sales of 28 million pounds a year for the next few years, and their production is going to max out at 26. So they're also going to be in the spot market buying or they're going to be buying uranium. So there's a couple of things there that are quite positive for the price in the fairly near term.
Anna, do you look at it?
I'm not going to give you much on this one, other than we think a lot about energy sources and whether that's renewable gas, uranium or other. I've got a company coming to present next week, which is a private company, and they're looking at fusion. That's a big thing in the Middle East at the moment. So I sort of keep an eye on it all, but it's not an area that I'm directly investing in, just by virtue of the strategy. Yeah.
And any more out there?
Top there, Danica.
Common or I got the bubbles. Nuclear.
I'll go.
50.
So it's pretty tough in the junior mining and exploration world. How would you see the world changing in the way that companies like Xanadu Mines or whoever fund themselves?
It's difficult to say how do you fund yourself through the cycle. Obviously, it's no issues when the market's going up, right? But I think increasingly, whether it's gold or an alternative commodity, supply is a massive challenge across the board. So it's going to be alternative sources of funding, like governments. I know governments aren't necessarily in the habit of strategically funding gold, but they're doing it when it becomes the hard metal out of the ground, right? So the challenge that we face as investors in the space is it's not just choosing the right investment, it's having the dollars to invest. So when we've got a bear market, we've got potentially money going out the door, we're making two decisions, not one, as to how we allocate that capital as well. So it's taking from one and putting in the other. I don't have an easy answer for you, other than to say, if you deliver on everything you say you're going to do, it makes a lot easier decision from our side of the fence.
John, any thoughts?
Look, I think like you've done, Colin, to get in a big partner is that's that A, provides cash, but also B, it provides a validation for the market to say, okay, well, these big guys know what they're doing. We can have more confidence in the project. So I think that's a very good route. I mean, obviously, rarely provides 100% of the capital and does leave these companies with a big equity gap, and that therein lies the challenge. So you've got to put yourself up by your bootstraps in terms of trying to fill that gap with offtake finance, with sub debt, and hopefully minimise the equity portion. So Todd, you're right. Since there's no easy answer there.
Anna, any thoughts?
I'll put my investment council hat on. And that's largely private capital, so it's not in the markets per se, but we think a lot about how the capital types have evolved and will continue to. So whether that's private capital, whether that's strategics coming in now, whether that is government, which we've talked about. The superannuation funds truly, and I speak to them a fair bit, they want scale, ability to invest in scale, but they also, and it's a nirvana scenario, they want collateral backing around that. And so whether that is offtake or a royalty annuity over a longer period of time, or physical assets that they can see and feel and touch, like infrastructure. I've been watching some really creative, and they are in the larger companies, but when you're thinking about your infrastructure assets or toll roads, there's ways in which you can be creative around that. So we would just encourage everyone to be very creative about how they source the capital and those kinds of arrangements. I'm sure there's no doubt it's tough, a chicken and egg thing when you're smaller, because you can't attract the scale capital, but that's what you need. But I think, I go back to my earlier comment, Australia generally is pretty entrepreneurial. And we are seeing a lot of interest coming down, particularly from Asia, Singapore, Indonesia, and the Japanese are spending a lot of time in this world and having a look around. So I would continue to just get out and have as many conversations as you can as well.
We got time for another one, Danica?
appreciate everybody's time, and it's Monday, so we better stick to the schedule and perhaps wrap it up. But
Okay, no worries. Well, look, thank you, John. Thank you, Anna. Thank you, Todd. Really, really interesting thoughts, and really appreciate you coming along today and speaking about these topics. It was really interesting, and I know you're all really busy people, and your time's very much appreciated by us here at MST, and I'm sure a lot of you, the audience. So everybody give a round of applause for John.